Jeff, it's great to have you back. That's got to set off some alarm bells in your mind, right?
No, actually, I find it a very surprising stat. You just look at the positioning data from the CFTC. You like copper, which is king of this commodity story, is running at about 30% of the length that it normally see. Oil is about average. Grains were at all-time record highs, and they're only about 80%. I think the key here is when you think about positioning is look at it in the context of total AUM. Commodities have gone down over the last 15 years. Stocks and bonds have gone up. So if you look at it as a percentage of AUM, it just gets smaller and smaller. So, I like to say I've never seen a market so long on conviction, but so short on position.
Okay, very well said. So let's talk through some of the commodities plays. Are you bullish on pretty much all of them? I mean, and this is interesting because we are watching things like lumber and copper, which is down from its highs, to figure out, has the inflation trade already peaked? From what you're describing, it feels like there still could be a ways to go.
Oh, yeah, we're arguing this is the early innings of a much longer commodity super cycle. But in terms of the commodities we like today, oil is the one with the best upside potential near term. We have the reopening of economies globally. You pass the baton from the U.S. to Europe, as well as the emerging markets. Even India is recovering. Oil demand just in the last several weeks has gone from 95 billion barrels per day to 96.5 million barrels per day. That's a huge jump in just a matter of weeks. You put that in the context of a nearly inelastic supply curve. In fact, you look at the rig counts in the U.S., they were 365 last week. They need to be 400 just to offset decline rates. We're not seeing the investment, which really leaves OPEC as the only game in town. Inventory is drawing. Our target in third quarter is $80 a barrel,
Sure,
with the potential of upside risk to that.
And it's ironic that, kind of the U.S. sitting on its hands from the ESG move is giving the power back to OPEC and pushing up the price of oil. A couple of maybe unfortunate side effects. But again, oil is a unique commodity in that its supply is controlled and it's under these ESG pressures. I can understand why someone will look at that and say that price can keep going higher. That makes sense to me. But as for the rest of the commodities, I mean, and there's so many different kinds. We're talking about metals, we're talking about grains, we're talking, and for all of those, do you think we're in the early innings of a multi-year cycle?
Well, when we look at the metals, the only reason you're negative on oil is because you got to go invest in all of the decarbonization of the global energy system, and that's what we're going to require copper. In fact, we argue copper is the new oil. You cannot electrify the world without copper, given the conductive properties of copper. So you need it. And as a result, when we think about the next 10 to 15 years and the demand for decarbonization needs, copper, aluminum, because it goes into high voltage transmission lines, nickel, silver goes into solar panels, and then you have lithium and cobalt. We call those the big six metal commodities. Those are the ones that are going to be central to this whole decarbonization theme.
I liked that so much I was tweeting it out as you finished the thought. I mean, we hear things, here and there about this is the new oil, that's the new oil, data's the new oil, and so forth. But your point is that by pursuing the ESG goals, we're actually making all of these commodities more attractive for the long run, pushing up their price. I mean, a side comment is how that affects, again, the affordability of this transition and those who rely on, the sort of oil products that are moving away from, which are going up in price as well. Let me ask you in the remaining time that we have about crypto, because you do cover that as well, and you have some thoughts about kind of the relative attractiveness of Ethereum here, right?
Well, I mean, you've seen Bitcoin rise because the world's back into a risk-on mode. I like to point out crypto is a risk-on asset. It does not trade like gold, which is a risk-off. In fact, this week, gold is off, crypto is up. Now, when we think about what drives it as being a risk-on asset, it's its real use, what you actually use it for. And when we think about the crypto that has the potential for the greatest use going forward, we think Ethereum has that advantage over Bitcoin.
Shepard Smith here. Thanks for watching CNBC on YouTube.